Hey, what's up, guys? Without a doubt, Bitcoin is the best performing asset year to date. But will it be the best performing asset for the next few years? We will see. In this video, we will take a look at the top 5 Bitcoin price predictions by experts. But first, let's take a look at the Bitcoin market, as we will have precise idea where we at and where we might go next. As of today, Bitcoin is fluctuating around $9,500. It is very close to break $10,000 sentimental level. There were a number of attempts to break that level, but so far BTC momentum wasn't really successful of doing that. Currently, it looks like we are forming a short-term ascending triangle, which has a decent probability of breaking out upwards. Similar triangle we had in the past, when Bitcoin was able to break out and push through the resistance. Hopefully, we will see this very soon as Bitcoin pushes higher about $10,000 a coin. To be honest, I'm not a big fan of the short-term technical analysis. Long-term view is much more appealing to me as an investor, rather than short-term trades. Most of the cryptocurrency experts share the same viewpoint as me. First one on the list is Raoul Pal. Let's take a look at what he has to say about Bitcoin price prediction.
You said something to the effect that if you could own one asset for the next decade, it would be Bitcoin.
Yeah.
And I'd love to understand the rationale, the reasoning behind that.
Two things. So let's take that same 30-year-old, and you've got 10 years. You're now in the stage where you start really trying to create wealth or save some money for future, retirement, whatever it may be, getting married, all that stuff. So you have an equity market, there's all-time high valuations. You have a fixed income market, yes, you can make money if you know what you're doing, but yields are low, so holding it for extended periods of time is not an option. Property markets are too expensive for anybody to afford. So what are you left with? Well, credit markets, well, you don't really get access to those anyway. They're more for professionals, and guess what? They're all-time record valuations as well. So you're stuck with everything that is normal at all-time record valuations. Right. So what are you left with? You've got commodities. Okay, so if you're looking at industrial commodities, well, you need to know what you're doing, because these things are massively cyclical and you can get killed in them. So then you're left with precious metals and Bitcoin that potentially have an upside that's different. Now, why is it different? Why is it important? Because, and I'm sure we'll talk a bit about this, is the environment that we're potentially going into with a massive wave of baby boomers retiring, with record debts, and governments are going to have to, and central banks are going to have to figure out how to stimulate economies, which are slow anyway, but when you've got this aging population, they don't spend money. If I look at my father's spending patterns after he retired, it probably fell 70%. Well, that's big for 76 million people in the US alone. So what happens is it slows down economies, there's too much debt for slow economies, it can become a problem, central banks need to print more money to try and keep this thing going, and essentially it ends in complex outcomes. So how do you step outside of that? Right. And again, there's Bitcoin and gold. There's two obvious answers. Are they the future of money? Well, gold is a money, and it's been a money for a very long time. So that's kind of obvious. And yes, will gold do well? Do I own gold? Yes. Do I think it's going up? Yes. Bitcoin different. Bitcoin is basically, think of it as an option on a future financial system. And it's not just a financial system. Everything is going digital. And Bitcoin and the blockchain and digital currencies and all of this world is like a parallel system that's sucking in the smartest people I've ever met. And they're all going to develop stuff here, because what they're saying is that system can be bettered. And what Bitcoin is all about, and that whole movement, and Bitcoin is just the flagship of it, is a trusted ownership of anything. And as a friend of mine called it, the security truth machine, because everything is recorded by numerous parties. Basically, you get rid of all of the issues of the financial system of who owns what, and can people take your assets away from you, and all of that kind of stuff. It also opens up the new world. So gamers and people who are younger understand that digital assets have value. Well, right now, digital assets are hard to transfer around, but once you start getting to tokenization and crypto and digitalized, the whole world is different. And that's why, if I skate to where the puck is going, as a Canadian would say, the puck is going to something new. And we know digital is everything. As Mark Andreessen said, software is eating the world, and it is. And digitalization is eating the world too. So as we go to digitalization, you need digital money. Okay, what is the risk-reward upside? Well, Bitcoin's probably 50x, 100x. Well, gold maybe 5x, 10x.
Yeah.
The downside for gold is less. Bitcoin, well, it's not 100% anymore, but even if it's 50% and it goes up a hundredfold, well, the risk reward is so skewed in favor of cryptocurrency.
Well, you did say in your tweet you're only picking one, so we're not.
And that was the point.
Yeah.
And I said, gold guys, it's not like I don't like.
Slid it in there at the end just to keep us happy.
Because everyone's going to, but what about gold? I'm like, the question was, what is the one asset that's going to give you that return?
Fair enough.
Now, if you think of Bitcoin at its simplest terms as a share on the future of a financial system, well, you're going to have these roller coaster ride bubbles until eventually you get mass adoption and the volatility slows down.
Right.
So yes, it was a bubble. I do expect it to go through the previous highs in the next 18 months, 12 months.
Wow.
But with Bitcoin, you could do it in a week. You have no idea.
Right.
But I do expect that to happen.
Okay.
Owning one asset class for the next decade, it would be Bitcoin. We are in the same boat, Raul. I like his reasoning and comparison gold to Bitcoin. Gold can probably go 5 to 10x from here, and Bitcoin can go 50 to 100x. Yes, gold downside is much smaller than Bitcoin, but even if Bitcoin drops by 50% from here, it's still, if it gains 50 to 100x, the risk reward is skewed into the Bitcoin's favor rather than gold. If Bitcoin does not go down and it increases by 50 to 100x from here, the price would increase between $500,000 and $1 million per BTC. Also, Raul expects Bitcoin to pass through previous highs in the next year or so. Next one on the list is Max Keiser. Let's take a look what he has to say about Bitcoin and express his Bitcoin price prediction.
Now, the next alternative hard money would be, aside from silver, of course, is great, but aside from that would be Bitcoin. And that's why you see some great interest in Bitcoin right now. The price is up this year. It's one of the very few markets in the world that's up in 2020, and it will achieve a market capitalization similar to gold in the many trillions of dollars. So you're talking about a $400,000 price is my target ultimately for Bitcoin, and it looks great.
Max Keiser Bitcoin price target is around $400,000 a coin. I believe the main reason why he chooses this price target is because if Bitcoin would reach that price, it would mean that Bitcoin's market cap would reach $7 trillion, slightly less than $9 trillion of gold's market cap. Next one on the list is Mike Novogratz. Let's take a look what he has to say.
What's your take on the event? It certainly seemed a little bit like a sell the news kind of event, at least initially.
Yeah, a little bit. I think there was a lot of hype going into the halving, right? We've come off from 4,500, so huge rally, a lot of retail participation. There's a great macro backdrop. We've talked about it ad infinitum of why crypto right now, and Bitcoin specifically, makes so much sense. And then you had the news that Paul Jones had bought it and then bought it for his fund, which is, I think, really, really significant. And so you had a little bit of a retail frenzy that got sold off. I would expect the market to hold here at 8,000, 8,500 and to start trading right back up. We're seeing at our shop just a huge increase in interest in Bitcoin and getting into crypto from high net worth individuals, from funds. Crypto's not easy to buy. It takes a while to get set to buy it. If it was easy to buy, it would be much higher. And so it doesn't happen overnight, but it feels like a herd is on its way, finally.
So I'm curious, we've seen in the past with these halvings, you see a sell-off 30 to 60 days. Are you positioned that way where we have a sell-off for 30 days and then the real rally comes? Or do you think that's the last two times and we're not going to have it again?
No, I laughed. I had a really original strategy of kind of selling into the halving and then buying the pullback. But we have seen so much activity that I didn't sell a damn thing. I put a hodl sign, hold on for dear life sign, which is a crypto term where, the real core crypto guys never sell. I literally really think that the movement we're seeing, listen, the halving comes almost at a perfect time. If you think about this macro backdrop of quantitative easing on top of quantitative easing on top of quantitative easing, the halving is quantitative tightening. And so, it's like an exclamation point on the macro story of why a scarce asset like Bitcoin should go higher. And so I haven't sold. I think, I missed the sell-off, and I think you're going to see the thing base here. And we will take out 10,000. We will go to 20,000 by the end of the year. I feel real confident about it.
To be honest guys, I'm not a big fan of Mike Novogratz because he tends to continuously jumping in and out of the market. Just like he explained that his original strategy before the Bitcoin halving was to sell prior to the Bitcoin halving and buy back the dip if the Bitcoin drops. Well, I'm glad he did not jump in and out of the market this time because Bitcoin price increased since the day of the halving. But I like his prediction of $20,000 by the end of 2020. Next on the list is Plan B. Let's take a look.
I started with the numbers. Of course, Bitcoin is a different animal than the things I normally model. So there's no cash flow like a company or a fixed income instrument or a derivative. It's a bit like gold. It's just there. How do you value it? In fact, the same problem is there for gold as well, because you could, of course, look at the cost of mining of gold or Bitcoin. I just went with the digital scarcity idea. Also, after reading Saifedean Ammous's book, The Bitcoin Standard, he has a whole chapter in there about stock to flow. And stock to flow is, of course, also known in the commodities world, gold, silver. So I use that as that stock to flow measure as a quantification of the scarcity, and then use that as an input in a valuation model. So maybe for the listeners who don't know, stock is the reserve, the amount of Bitcoin or the amount of gold that's above the ground, that is just there. And flow is the yearly production. And then you just divide the two. Bitcoin, you have 17 or almost 18 million Bitcoins right now, 750,000 per year are added. That number is rapidly declining, by the way. But if you divide those two, you get a stock to flow multiple of 27. And what I discovered was that the stock to flow number is correlated with the market value. So for example, the stock to flow of gold is 55 or something, and the market value is about 10 trillion US dollars. If you put all those stock to flow numbers of all the commodities out there and put them on the line, you get this straight line. It's actually a power law with a super high R squared, super high correlation. It's just amazing. So there's actually two models out there. So there's the cross asset model where it all started with gold and silver and that's that, etc. But there's also the time series model where if you plot the stock to flow time series of Bitcoin of the last 10 years against the market cap, you can also see the correlation there and measure the correlation. And it's also really high, like 95%.
Well, I know personally, whenever I read it, I was like, this is it. It's about time somebody has put what I felt was happening, but didn't know how to describe it, right? And I think a lot of people in the community had this intuition that what you were describing and what you were actually applying mathematics to was happening, but we just didn't know how to describe it. And so here you come into it and you start describing it. For people that are not familiar with R squared values, describe what this is, describe what it means whenever you model something, and then the actuals compared to what the projections were, what that means.
R squared is a statistical measure for goodness of fit of a model. So if a model fits really good to the data, like perfect fit, it has a high value, 100%. And if there's no fit at all, it's 0. If you look at the numbers for the cross-asset stock to flow model, 99.5%. That's like almost a perfect fit. That's amazing. I've never, ever seen that before. And if you look at the 95% of the time series stock to flow model, that's also very, very high. So it measures the amount of variance in the price, how much of that is explained by the amount of variance in the stock to flow. And in fact, it's not the most important measure. There are other measures, but it's a frequently used measure. So that's why I use it. The halving is a very important thing because every 210,000 blocks, that's about 4 years, the subsidy that miners get when they mine a block is halved. From an investor's point of view, the supply is halved. That doubles the stock to flow measure and increases the value as well. So especially those stepwise nonlinear function is very, very interesting because markets are anticipating on it. There's a lot of debate and narratives always around halvings. But if you look at the numbers, so we're now at a stock to flow of Bitcoin of 27, and that gives a value of, well, about a little under $10,000. So we're about there, a little bit over right now. But after the halving, if the stock to flow doubles, that's in May 2020. So that's 8 months away. Very interesting, very, very awesome event. The stock to flow doubles, but the value of Bitcoin goes 8 or 10x, somewhere between, let me give a rough range, somewhere between 50 and 100K, starting somewhere after May next year. 4 years later, there's another halving. In 2024, the stock to flow will go to 100, something we as humans have never seen before. Spectacular moment in time. And the value that goes mathematically with an asset that has a stock to flow of 100 is somewhere between $400,000 and $1 million per Bitcoin.
I think most of us familiar with Bitcoin stock to flow model. Prior to Bitcoin's halving, stock to flow of Bitcoin was at around 27, and after the Bitcoin halving it doubled. Right now it's at around 54, which is slightly less than the gold stock to flow. Therefore, according to this model, Bitcoin will go somewhere between 8 to 10x from here, which means in 4-year cycle, we might see Bitcoin somewhere around $80,000 to $100,000 per BTC. In these 4 years, I think this is definitely realistic. Let's take a look at the next Bitcoin expert, that is Tom Lee.
Every peak of the generation has actually been the peak of the stock market. You've had complete transparency to predict every bull market and bear market just looking at population alone. And the point of this is that the millennials don't peak till 2038. And I think that's the only generation that's going to matter for anybody in this room. Okay, so there's 2.5 billion millennials globally. It's 43% of the adult population. And 2018 is the year that there are now more millennials that are producing income than living at home. So this is why the crossover is happening today. Now, we've done some consulting work for some companies, and this is one of the outputs of our study. But we show that in the next 10 years in the United States alone, 90% of all purchases of financial products are going to be decided by a millennial. So the single industry that's going to change the most in the next decade is going to be financial services driven by a single generation. And you can see part of that has to do with the income share, that millennials are actually doing quite well today, but within a decade they're going to control the largest wallet in the US. And it's already happening. This is Chase credit card data, and this is showing you year-over-year change. The only customer segment at Chase that's consistently growing their credit card spending are the millennials. Okay, but what do we know about the millennials? Number one, this is a Facebook study. 92% of millennials don't trust banks. First Data did their own study. 71% of millennials would rather go to the dentist than listen to what a bank says. And actually 33% believe that they won't even need a bank in 5 years. Why do millennials hate the banks? Remember, the millennials were teenagers during the financial crisis, and in the US, 20 million households lost their home to a bank. Globally, of course, we had the same housing crisis. Millennials only remember that banks took their houses. Okay, and of course now millennials don't really even go to a bank. 68% of millennials do their banking primarily on a mobile phone. I mean, it's an app. Today, to them, Chase is just an app on their phone. And they're going to control roughly, according to First Data, roughly $7 trillion of assets by 2020. So again, this is just US data, but these are huge, huge numbers. And I think Asia is really important to watch because the adoption rate in crypto is much higher. 14% of Japanese males own a cryptocurrency, and 23% of Korean adults, 20-year-olds, are active in the cryptocurrency market. This doesn't surprise me. Japan and Korea were the first with mobile adoption, multiplayer gaming, high-speed internet. A lot of the technological trends actually are driven out of Asia. If you had to say what was the biggest trade to have made in the last 20 years, it was FANG, or in Asia it was BAT. FANG is the 4 stocks, Facebook, Amazon, Netflix, Google. $1,000 invested in FANG, starting with Amazon, turned into $1.5 million in 20 years, okay? But here's the surprise. 70% of that return was just explained by the growth of the global internet. If you had taken each of these 4 stocks at their IPO and not modeled their company at all, but you just said, I have a projection of how many internet users are going to grow over the next 20 years, you would have gotten 70% of the return correct on these stocks. It's all about the macro, right, the tactical. And we've argued this with our clients, our institutional, that 70% of all return in equities is a tactical decision. Well, you might say, well, that's once in a lifetime. It's not true. In the 1980s, the boomers became the biggest consumers, right? Because it was a huge generation. And so I'm showing you this chart that in the 80s, consumer spending in the US tripled in a decade. Never saw that before in any period. And that tripling allowed consumer stocks, the 7 biggest, okay, this is Walmart, Home Depot, Hasbro, Gap, Limited Brands, Dillard's, to turn $1,000 into $1.2 million in that 12-year period. Sorry, in that 20-year period. The FANG stocks of the 80s were the consumer stocks. Every generation creates another FANG. And again, I think the next big FANG is within fintech, whether it's Square, probably Bitcoin. That's really the opportunity of the generation. And let me explain why again. Crypto, I think, is still in the earliest days. There's only 50 million crypto wallets, active ones, at best. I mean, that's an aggressive estimate. But there's 227 million PayPal accounts, and there's 4.6 billion Visa and MasterCard accounts. If you use social network value, which we did with FANG, a 50 million going to a 4.6 billion wallet, just using Bitcoin as a proxy, would mean Bitcoin could be worth over $10 million per Bitcoin in that 20-year period.
I actually do like his investment thesis. Different generations move different markets. And as the world becomes more and more digital, it's not hard to see what an impact it will have on digital businesses and cryptocurrencies. As social network value increases, Bitcoin should increase respectively. Tom Lee believes that at the peak of millennial generation, Bitcoin might reach $10 million per coin in this 20 years period. Let me know what do you guys think about those Bitcoin price prediction, and what is your Bitcoin price prediction by the end of 2020 and beyond. Leave your thoughts in the comment section below, hit that like button, and subscribe